All right, here we go. We should be good here. All right, welcome traders. Happy Sunday night. Should have video, should have audio. My audio mixer shows I'm getting sound. I'm trying a new headset here instead of the mic, so I have no idea if it's loud or soft. So if you guys could let me know either way. And for those that are just tuning in for the first time, there is a delay between the chat and when I actually see it. So if you type something and there's a little bit of a pause or a little bit of delay, just bear with me. I'll try to get to your question as soon as possible. All good. Thanks, Paul. All right, so let's go ahead and dive in if everything looks good. Real quick disclaimer, this is for educational informational purposes only. This is not any recommendations, buy or sell. Make sure you do your own due diligence. This is not investment advice. So let's start off. I'm just going to go through the normal routine, what I would normally do on a Sunday scoop. Then we'll dive into any questions, charts, anything else you guys want to talk about. But I always like to start off with earnings. This week you have some notable names reporting this week, especially with what's going on with transportation, with energy. You know, you see the rails are looking strong. So you have something like FedEx reporting this week. It's going to be really interesting to see what kind of numbers they put up, and especially with guidance. You know, we've had all these supply chain issues. There is some upper management changes going on with FedEx. I believe they were announced on Thursday or Friday, that the CEO is going to be stepping down at the end of 2022. So it'll be really interesting to see what kind of comments come on the call about that, what analysts have to say, what kind of questions they ask, and then how the stock reacts post-earnings, post-conference call, to see how it trades, see what kind of guidance they give. Also, we do have a couple software names. We got Coupa reporting, GME's, GameStop's going to be a popular one on Friday, but the chart is breaking down. So regardless of what they put up, the meme stock run looks like it's over. And then we just got a few other names sprinkled in there that some are familiar with, but I'm not sure that this is going to be the best week to report earnings considering everything else going on this week. As far as the macro calendar, this is really what I wanted to dive into. This is a huge, just kind of macro week because of what we have going on. We have PPI on Tuesday. Now, PPI has been just as important to the market as CPI has been. So we always get that CPI data at the beginning of the month, and then it's always followed up by the PPI. The PPI, is the producer side of the inflation. And if that number is really hot, we could see the market, see more downside or see a reaction to that if that number comes in hot. They're expecting a 0.9, right? The previous was a 1. And so if this PPI is high again or even in line, it's just going to show that not only is the consumer feeling the inflation, but the producers are feeling the inflation as well. Then we come into Wednesday. We have the big FOMC meeting. This is kind of been scripted. It's been, it's been expected as far as this is going to be where they're going to hike rates. Right now, they're expecting a quarter-point rate hike, and I think that's kind of what Powell was scripting in both his House and Senate testimonies, that he's kind of on board for a quarter-point hike. I think if we were to see a 50 or anything higher, the market might be a little bit shocked initially. I think the market would digest a 50-point hike, later on in the week, maybe next week. But I think right now the market is kind of going to be expecting a quarter. Anything higher, we'll see how it reacts. And then it's always followed by his press conference at 2:30. And then just like we do on every Thursday, we have the jobless claims along with continuing claims. The market really has not cared about that for over a year. And the reason I say these are important, PPI and the FOMC and these few other things, is because if you pay attention to when these macro events come out and when the market reacts, it tells you what is important to the market at the time. And this can change week to week, month to month, quarter to quarter, year to year. And if you noticed when the market stopped reacting to those continuing claims and those initial job claims numbers, it told you the market was already pricing all that in, or it was comfortable with the trend, or it was comfortable where it was at, and it really didn't care about it anymore. Because think about when is the last time the market really paid attention to CPI and PPI? It's been probably a few years since the market has even cared about those things. The FOMC has always been an event, but the wall of worry, or the data macro point that the market cares about, changes all the time. And if throughout the course of the 2022 inflation starts to come down and the CPI number, PPI's numbers start to decline, then maybe the market won't react to it anymore. It's the same thing happened with the COVID cases. If you think about every time we had a spike in COVID cases, or we had a new variant come out, the market would react strongly off that first real big headline. Then after so long, after time went by, it didn't. The more cases that came out, the market just didn't care. It stopped reacting. So when the market stops reacting to a news or to an event, it tells you that it's not that important, or that it's either priced into the market, or it's worrying about something else, because there's always a wall of worry for the market. As far as IPOs go, as of now, to date, 2022 the IPO activity is down 70% compared to where it was at in 2021. We have had literally a handful of new IPOs this year in the first 3 months, 2.5, 3 months here. And that activity is way down. And that just tells you the market environment we're in, that nobody wants to bring a new offering to the market right now based on the action, based on what's going on in the markets. And the same thing is happening with the SPACs. They're down 88%. Now, SPACs may have been just a kind of a COVID play where there's so much liquidity in the market. It was a quick way to instead of going the IPO route or a direct listing route, it was a quick way to make some investments. We'll see if SPACs continue, but I have a feeling that was kind of just a phase based on what was going on in the markets. There are a couple events this week. Adobe is hosting a 3-day summit. Nike and Walgreens are a couple of the notable speakers. JP Morgan is having an industrial conference. CSX, JetBlue, and Alaska Airlines are going to be a couple of the notable speakers there, as well as Starbucks is holding an annual meeting on the 16th. The stock looks awful. Stock looks like it's heading towards 72. So wouldn't be surprised if this sees a little bit more weakness before that event. As far as some other things going on in the market, if you look at what's going on with the ETFs, the consumer staples was actually one of the stronger of the ETFs from the 2020 lows all the way through 2021. You had names like Costco making brand new highs, Pepsi, Coca-Cola. Those stocks were heading or testing all-time highs, if not making new all-time highs. Well, last week, these names really gave it up. If you look at what happened with Pepsi, with Coke, even with Estee Lauder, Walmart, and a few of these other names, they really rolled over hard. And you can tell that just by the weekly candle where they started off and where they ended. They're actually breaking now below all EMAs, broke the uptrend, and looking heavy. So I'd watch for some continuation. Costco could be one of those names that had a great run. Maybe it settles in here a little bit. You see some profit taking on that name. Me personally, I'm going to be watching Estee Lauder, and I'll talk about that in a minute. For a short, we'll go over the indexes in a few minutes. I'll talk about gold, Bitcoin. One of the names I'm actually watching here too this week is going to be Google. Google has the death cross going on where the 50 crosses the 200 day. If you really look at the chart, it has not been able to close above the 20-day moving average since back here in February was the last time it actually closed over the 20 EMA. Ever since then, so over a month, It's been rejected by the 20 EMA every single time, failure to close above it. So same thing happened on Friday, had a big bearish engulfing candle on Friday. So I'm going to be watching this name for any kind of failure, any kind of early fail, red to green momentum for another leg down and come back and retest this 2500 level. So this is on short watch for me tomorrow. I don't think there's any reason that you shouldn't keep Netflix on short watch. If it breaks 334, it's going all the way back to 300s in my opinion. Tesla's going to be another one. Tesla, if we look at the daily and we'll take a look at it, it actually had a bad close on Friday, closed below the 200 day. Everything about this weekly candle is looking bad as far as the bulls setup goes. I think this could have a big leg down, has a ton of room, maybe even back towards 700. So almost about another 100 points down. CAR is one of those names that's still looking good to the upside. It broke over that 205 level on Friday. As long as it can stay above 205 tomorrow, this should see some continuation, has room back towards that 225 level. These that and Hertz were some of the names that were bullish. The CELH weekly candle says all you need to know about this name. It's breaking the uptrend that it was on, 5-6 week uptrend of making higher lows. Bad week for it last week. I'd be watching this name. This name looks like, if you're looking for a short opportunity, that name looks like it's heading down lower as well. So I talked about this Estee Lauder. This is another name just like Google and Tesla. I'm going to be watching for any kind of early failure within the first 30 minutes of the day, any kind of failed red to green for a short setup. I think this name could see easily back down and fill this gap from back in February. What is this? 2020, 2021? Yeah, February 2021. It has this little earnings gap. And we can actually, we'll look, I'll pull up the chart here. But there's just some other names. I mean, just going through all of these IPOs in the last 24 months, anything that's IPO'd has just looks absolutely awful, whether it's just holding barely above its IPO price, its debut price, or they're all trading below. I mean, you think about names like AFRM, Dox, Doxin, Unity, UPST, all of these names. I mean, you name it, they're all looking awful. All right, so let's jump into some other things that I wanted to talk about tonight. So I've posted this fear and greed index a few different times. The only reason I ever look at this thing is because I like it when it's at the extremes. I like what's in the index, the fear and greed index, what it's made of as far as the things it looks at. But really, historically, I just look at this longer term trend. I'm really only interested in this data point when it's above 80 or below 20, because usually that's a good sign that a reversal in the market is coming soon, maybe within the next few weeks. And historically, you know, I've been tracking this thing for a few years. If you go back even to say 2016, it holds pretty true. I mean, you can even see here, this was the 2020 lows in March after the pandemic. And then we've dipped below 20 briefly here in the middle of 2021. And we saw a nice reverse in the market. Same thing happens when it gets kind of oversold or overbought or over greedy to the upside. Anytime we start getting above 80 on this thing, it's telling me, hey, I need to start taking caution on any kind of swings or new long entries that I plan on holding for some time. But the same thing kind of on the downside. You know, you can see these kind of snapback rallies. You could see it bounce in the market. Now we've had some certain days or certain parts of the day where we've seen some snapback rallies, but we've failed to hold them. And the next day it usually ends up getting sold all right back off. So we're not there yet, but the lower this thing goes and the more we stay in the extreme, the more I'm always on the lookout for that, for the signs of that snapback rally starting. So that's what why I like to use that thing, or why I like to talk about that thing. So let's just dive into a couple of the charts. As far as the S&P futures go, you know, we're getting a little bit of a bounce here, but I'm really, that means nothing to me when the futures are up a little bit on a Sunday night. What has happened overnight or even pre-market hasn't really mattered during the cash session, the intraday session. It seems like any kind of gap up on the market has just been an opportunity for sellers to step in right at the open. For me personally, the last couple weeks, anytime we've gapped up, I've been shorting the open. And to me, that's been one of the best plays that I've had consistently for a while now, is just any kind of gap up, just shorting the open, let it gap fill, and then see what happens after that. Because anytime we've gapped up for, it's been a few weeks now, it's just sellers straight off the open. And it doesn't even matter what sector it's in. It seems like, other than maybe energy, it's all been just giving it back up. So even if we were to open up or gap up tomorrow morning, I would still expect that sellers to step in off that open, as long as we're staying below the 9 EMA. And every time we've done that, and even Friday, we were above it. We were actually above this 4280 kind of zone I've been watching, and we failed to hold above it, and we sold off all day. Now, what I was watching for up until last week was if the market could start building a base in this 4260 to 4280 range, because every time we've come back down and tested it, you can see it here: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, up until this day, 14. Every time we tested that range, it held. Now, we saw bounces. Those bounces got sold off. We retested, saw a big gap down. This was the Russia-Ukraine situation. Big gap down, rally, snapback rally, squeeze, follow through day, chop around, retest that low. But, when the market is in a correction period, you can go up and have snapback rallies. You can come back down and retest support. And you can have this kind of ping pong effect going on for a while until the market just builds a new base. But once we broke below it and we closed below it during the trading session, during the intraday session, that told me that this was done, that the opportunity or chance to build this as a base was done for now. And you can see every single time, once you have strong support break, it then becomes strong resistance. I mean, every time we've come back and retested it, we've failed, including even gapping up above it on Friday morning. We were way above it Friday morning when we had those talks. Putin had some comments in the morning that they were, he was looking for more peace talks, and we did nothing but straight sell it off. Now, to kind of go along with this was the VIX. If you pay attention to the VIX, even intraday, the VIX really didn't do much on Friday. Now, to me, that just is a combination. If you understand how the VIX works, a kind of a combination between it's basically looks at the 30-day out, the spread between the calls and the puts. And so it's based on the volume. It's based on the buying and the selling of those at the money strikes 30 days out. And the VIX really didn't do much on Friday. It just kind of went sideways. So to me, the fact that we sold off all day, it almost felt controlled, almost, computer controlled. It was just a pure selling day, and nobody was really hedging. Nobody was really buying calls. So, the VIX really didn't do much. It was like it was all systematic. And we'll see where the VIX is at tomorrow, what happens tomorrow. But the fact the VIX is still elevated around 30, but that it didn't scream higher towards like 35 or higher, just tells me that, people are either short or they're okay with the selling that's going on. They're not trying to get long, which would elevate that skew. So for now, the S&P remains in a downtrend. The NASDAQ remains in a downtrend. We've been unable to close even above the 9 on the S&P for a few sessions now, for over a week, let alone the 20. We have not been above the 20 since February 9th. Same thing with the NASDAQ. Here, I'll try to get a cleaner kind of picture of the NASDAQ here. This is a little cleaner, this version. But the NASDAQ, you can see this orange line is the 20-day moving average. We have not been above this since February 9th. So any kind of short-term rally the 9 EMA has really been kind of the area, but the 20 has definitely been the top of the session, and we failed, and it's just both of them are pointing down. We just continue to trend lower. So something I'm watching here on the NASDAQ, you can see just by the trend lines I have drawn that, the downtrend remains in place, but we are getting a little bit of coiling action. The range is intraday, the range is big, but overall, week to week, month to month here, the range is slowing down. So that usually means you have a bunch of consolidation going on and a bigger move is coming. We just don't know which way. So if we were to break this bottom trend line to the upside, obviously that next big move is going to be down. It's going to be a hard flush. But if we just continue to chop around in this range, maybe it's just kind of looking at a couple different scenarios. If tomorrow we were to be weak and we see more risk off into the FOMC meeting and they sell this off and we start breaking these lows, especially if we trade below 13,000, then yeah, I think we start heading towards 12.8, 12.7, 8, and then maybe 12.5. We'll see how low it goes. But if we do hold and we just chop around, then we'll probably get that bigger move post FOMC, maybe even on Wednesday afternoon or Thursday after we get the rate decision and we hear some more context behind what happened in the meeting. As far as Bitcoin goes, Bitcoin has been one of those, to me, indicators as far as what's going to happen with growth names. There's been some correlation between the weakness of Bitcoin and the weakness of growth, in my opinion. When Bitcoin has rallied, growth has tended to rally. Same thing on the sell-off. Anytime Bitcoin has been weak or selling off, it seems like growth names are weak. So I don't know if anybody else has been paying attention to that, but it's just something I've noticed. Just there seems to be that little bit of correlation. For now, Bitcoin is down. We'll see where it's at tomorrow. Another thing I'm keeping an eye on is if you look at the 4-hour chart on both gold and crude, they actually both are breaking down on the 4-hour. So here's gold. Gold is starting to lose EMA support. It actually has like a 4-hour head and shoulder, and it's almost testing that neckline. It's got, I would say the neckline would be right here at 1960. So if gold was to break 1960, and let's say crude was to break down, if crude loses 104s, it's kind of testing the neckline here on a 4-hour head and shoulders. If crude was to lose 104s and gold was to roll over and say XLE even rolled over, then I would be watching for rotation into maybe back into the NASDAQ, maybe back into some growth names. Because the thing about the market is money never really leaves the market, right? It just shifts from one area to the other. Now you will have some cash raised, but I mean, for the most part, you're talking about trillions of dollars here. So when one sector goes down, another sector typically goes up. The money just shifts, right? So all of this selling that we've been seeing in growth names has really just went into XLE, went into gold, went into crude. I mean, you're seeing energy names run that have absolutely no reason to run. But just, another thing I wanted to talk about tonight is just how patterns repeat themselves. And it doesn't matter the name, it doesn't matter the sector, it doesn't even matter, the industry or whatever's going on. If you look at historical patterns or you look at studies, say chart patterns, and crude to me looks no different than a penny stock run, than the crypto run, than the marijuana run, than anything, the cannabis run, than any other parabolic chart that I've ever looked at. And I'll show you some examples of what I'm talking about. This is typical of what happens, right? A sector gains momentum, right? And the sector starts to grind higher, grind higher, grind higher. Then everybody starts noticing it and everybody starts seeing it. So then everybody gets on the boat and then it just starts to make this huge parabolic move. And just like any other parabolic move, they never seem to last or they never seem to hold. It's why chasing crude or gold or anything at these highs or these big breakouts, these parabolic runs, is never a good idea. It doesn't matter. You can take the name off the chart. These charts all look the same. Let me show you some examples of what I mean. So let's just take a look back at, say, TLRY, right? This is one that I remember because I was trading it during the cannabis run, right? This looks just like Crude, doesn't it? Where you get the break out of a base, it starts to gain momentum, right? It starts just grinding higher, grinding higher, grinding higher. Then everybody notices it. Everybody gets on board. Shorts get ran over, and the thing goes parabolic. And just like every other parabolic run, they never last. They can't sustain, and it fades back off. It's why I was saying, keep an eye out for some rotation in the market, because if Crude rolls over and gold rolls over and energy rolls over. And the other thing to keep in mind too is the XLE. If you look at it on a monthly chart, XLE was actually coming into some strong resistance. If you look at the monthly here, this 80 area has been prior resistance going all the way back to 2008. So it makes logical sense for it to take a breather, or maybe some of that parabolic run to kind of settle in, and for some of these names to come back. I don't care what the macro headlines say. I don't care what's going on. Just look at the chart. Sometimes you have to just cut out the noise and just look at the charts and look at these patterns, regardless of what's going on. There's always a catalyst that starts the run, but eventually that catalyst phases out. And I understand we have what's going on with Russia and Ukraine, but these patterns don't change. It's just insert sector, insert name, right? The same thing happened with Bitcoin, right? Let's go back. You can even go back just even into 2020. Right? Starts to break out of a base, starts to grind higher. It breaks out of that base. Everybody gets on board. It goes on a parabolic run. Then it has to set back in. And then it actually had some continuation, but eventually this gave up as well. And then it had another little parabolic run. Now, crypto's been a little different as far as the continuation. I don't think Crude's going to have that forever, but it's just, these patterns just repeat themselves. It doesn't matter. I mean, for those that were around, I don't even know, for those who are around with the shippers. Now, Dries isn't even traded anymore. Oh, what was the other one? I don't even know if some of you guys I don't know how long some of you guys have been trading, if you guys were around for any of the shipper craze. But these shippers, was this back in 2016? Look what these shippers did. Now, a lot of these names have went through stock splits. Ship never really traded at $1,800. But, I mean, look at these. The point is these parabolic runs. This is exactly how they all happen. They break out of a longer term base. They grind higher. The momentum catches on. Then they just go parabolic. The same thing happened with this sector. And these patterns repeat themselves over and over and over. And you could see the exact same thing setting up with Crude. It was just a matter of time before it had the blow off top. So as far as just kind of some recap, for me, I'm just going to be watching some of these names for short-term failure tomorrow. I'll give you an example here with Google. So Google closed near the lows. So what I'd be watching tomorrow at the open is any kind of pop around the open, maybe 26.20. Watch for rejection. Watch for some failed green. If it goes green and then it can't hold for 5, 10, maybe even 15 minutes, goes back red, then for me, that's a short off the failed red to green. Let it come all the way back down, retest these lows, and then if that breaks, then we start the next leg down. And we start heading back towards 25.60, 25.40s, and so on and so on. Just kind of stair step down. That's, all of this stuff is always market pending, depending on the price action. You have to respect the price action because of what we have going on this week. We have the FOMC, we have quad witching on Friday, we have index rebalancing, both the SPY and the QQQ rebalance on Friday. But the same thing with this Estee Lauder. I'm going to be watching for the same kind of setup where, any kind of pop at the open, to be watching for any kind of failed red to green, and then let it fade off if they want to continue to sell these names, these consumer staple type names. But I think Tesla's in that same kind of boat. If Tesla fails to reclaim above 800, 806, and this, and the NASDAQ is weak, and I see relative weakness out of this name, I'm going to be looking to short this name as well. I think this goes all the way back towards 700, in my opinion. Just looking at this daily chart, the weekly chart, there's really nothing here to hold it up if it breaks Friday's lows. Maybe you come back and retest this 783 area where it held here and here. If those break, then yeah, I think it comes all the way back down and tests this low from the 24th, personally. I'm long ICL, look to add, but not seeing the thrust. Let's take a look. It's a ticker I'm not familiar with. ICL. Okay, well, this isn't a bad looking chart, so I'll just tell you what I see. As far as ICL goes, it looks like it had a nice run, right? It's still holding the 20-day moving average. It came back and retested this prior high. This is almost outside of maybe the gap up on Friday, maybe just kind of an inside day. There's not really much you can take from this day. The only thing I'm going to tell you now is that you just want to make sure this stays above 1087. You want to hold this 20-day moving average. You want it to hold this support now, right? It needs to stay above there, right? 1080. It needs to hold 1080. If it loses 1080, it's probably going to come back down, test this 50-day, which would be another good support level right around 1023. Now, a couple things that I'm noticing here is, one is the MACD looks like it's about to cross over, so it is losing some momentum, but that doesn't mean the move is over. These secondary indicators are always lagging indicators. They're not leading indicators, so you have to take them with a grain of salt. The other thing is your RSI is starting to make lower highs. So when I have my RSI making lower highs, I have my MACD crossing over, and then I have kind of this parabolic volume look here. It tells me that this thing needs a breather, right? This thing needs to consolidate up here or in this range before it's going to make another run, right? Because you see how you had the volume speed up. See how the volume candles kept getting higher and higher, and then you had like kind of this puke. The volume sprinted until it ran out of gas. Now it's out of gas. Right, so it needs to consolidate and build a new base up here. And that could take days, weeks, months, we never know. But I don't even know what sector this is in. Chemicals? Is this just caught up in energy and crude run? Because if it is, I think a lot of these names that have made these parabolic runs or made these moves, they're probably going to go back to where they started. Personally, if crude, once this crude thing cools down. Quad witching typically leads to chop, but with all the headlines, do you expect volatility? Yeah, that's a great point. I always called quad witching week basically ChopX. It's funny, a lot of times there's a lot of us that call OPEX week ChopX week, because if you look at a weekly candle, if you go back the past couple of years and you look at what happens during quad witching or any kind of, even during just a normal OPEX month, it tends to be kind of a doji candle week, right? Meaning that from where you open on Monday, where you close on Friday, it's usually pretty flat. But I think 2022 is completely different. The market has been very, very weak. There is days where it's just sellers are in control, bears are in control. Some days the selling is just relentless. It's not even specific sectors, it's market wide. And I think that was just going through, a few hundred charts today, I think that was a great example of Friday. Friday was just relentless selling. It didn't matter the sector. There was very few parts of the market or very few names that were actually safe or held up on Friday. Most of them, it didn't matter the sector, they were down. I mean, there were some ugly candles painted on Friday. And, maybe that was just some systematic selling. Maybe that was something to do with future contracts rolled over on Thursday. So maybe there was something involved there, but maybe there's just some more risk off into the weekend with the FOMC and the Russia-Ukraine stuff going on. But I mean, to me, just looking at the technicals, I mean, we're still below the downtrend. We cannot close above any short-term EMAs, the 9 or the 20 specifically. And we broke below my big support zone I've been watching, that 4260 to 4280 range. And to me, as long as we're trading below that, it's hard to be bullish for now. Now, again, that can all change. The thing, if you're going to be a short-term trader, an active trader, a day trader, whatever in this market, there's been plenty of opportunity. But you have to pick your spots and you have to be able to flip your bias quickly. I mean, very quickly. And you have to be able to respect the tape, respect the price action, not get biased, not get stubborn, and be able to adapt to what you're seeing at the present moment. Because there's been days and there's been even times during the day where we'll catch these little rallies, and then there's times where we get no rally and we just fade it all right back off, right? I mean, just look at the 4-hour chart, right? We get these little rallies and then we just give it all right back up. Or there's been parts of the day where it just, like Friday, where it's just relentless, where you just got bear flag after bear flag after bear flag. And, I think Friday was a great example of that. Let me kind of show you what I was talking about. Let me pull up FinViz. I mean, Friday was, I had a great day on Friday personally. I was just shorting a lot of names, Tesla specifically. I was leaning into Tesla pretty well on Friday, but you could see here, I mean, look at Tesla on Friday. I mean, it was just kind of bear flag after bear flag after bear flag. I mean, it was just nonstop all day. And all I was doing was shorting them, rolling, short, roll. It just kept rolling down strikes. And I mean, it's just bear flag after bear flag. Tesla was a gift on Friday. Okay, so that ICL is fertilizer. Yeah, so to me, that fertilizer has everything to do with Russia, right? Russia restricting fertilizer, and Russia produces some fertilizer, if not a lot of it. So yeah, to me, that's just kind of that volume explains it all. Vail. Let's take a look at Vail. All right, so it looks like Vail's just coming up against a big resistance area. You can see where it's traded. It traded for what, 4 or 5 months up in this 21 to 23 range. So that's going to be strong resistance when you're trying to reclaim it. So it made a really nice run off the bottom since the last earnings. Looks like it's just taking a breather here post the other earnings. I mean, it's rallied the last 2 earnings. So that's a good sign for Vail. I think it's just taking a breather here. Came up against a big resistance area. I don't think there's any reason to panic on Vail. I think it still looks good. It's still holding the 20-day, still holding the uptrend, the overall uptrend. I think Vail looks fine for now. It may just pull back, take a little breather. In Starbucks at 100, should I cut my loss after this 15 or 30 at the open? Yeah, I mean, everybody's risk tolerance is different. Their strategy is different. But to me, I was looking at Starbucks earlier, and that's, I mean, this is an ugly candle on Friday. And if if it fails to reclaim 84, I'm not going to tell you what to do with your position, but to me, I think Starbucks still can go lower. I was looking at like 72s, I think is what I was looking at. Yeah, right in here. I think if we see more risk off in the market, right? I'm looking at this 70. I was looking at, Starbucks realistically could come all the way back into 72s next. If it cannot hold up this week. Now they do have an event this week, but I'm not sure that that's going to help it until the actual event happens. Everything about this is pointing down. Everything crossed over the 200-day. It's trading below the 200-day, below the 50-day, below the 20-day. It hasn't been able to trade above the 20-day since January 5th. So yeah, this is. Realistically, once it broke 94, that probably should have been your exit sign. Once it tried to build this little base here and couldn't hold that base, hindsight's always 20/20, but it's a great way to kind of just go back and revisit the price action, what the chart was telling you. Airlines and cruise lines held up. Would I consider that a sign of bottoming? Let's take a look at a few. So let's look at RCL. So the first thing I like to do when I'm trying to figure out if it's building a base is zoom out. Always zoom out. So start off with the monthly, right? And actually, let's actually look at the monthly chart. Let's do this. Let's do it this way. All right, so let's take a look at the monthly. I want to make sure I'm using my correct EMAs for the correct time frame. So let's take a look at RCL. So to me, this is what I'm seeing on the cruise lines. So RCL broke the uptrend, right? It's actually, to me, RCL looks like it's, if you flip the chart, if you were to invert the chart, it looks like it's creating another leg, like kind of a rounding top where it's going to make the next leg down on the monthly. That's kind of what the monthly is showing me. Now let's take a look at the weekly. So the weekly broke below support. They tried to hold it on Friday. So no, I don't think these are trying to bottom. They're just stuck in a range. At least RCL is. Now let's take a look at CCL. Yeah, these are just stuck in a range. These aren't trying to bottom. And as far as airlines go, I think airlines, here, let's just look at a monthly chart on airlines. To me, I think airlines have been crap forever. This little run from 2012 through 2014, they had a nice little run. But if you go back and just look at the past 8 years, there's nothing going on with airlines. There's nothing. It's like everything is against airlines. The charts are telling me nobody wants to own airlines. Did they catch a bottom, or did they bounce with the 2020 lows with the bailouts and everything else? Yes, but everything bounced. Everything went up at the bottom of 2020. But to me, these are just struggling. Like, nobody wants to own these stocks. And if gas prices are going to be strong, that's a headwind for airlines, not a tailwind. That means their costs are going up. That's one of their main things, right? Is gas. It's one of their biggest costs is gas. So fuel. So no, I think airlines, I think airlines are a complete avoid in my opinion. There's so many other better things I'd rather own than airlines. Personally. Apple showed relative weakness. Yeah, I think Apple is so this is my thought on Apple is Apple was holding up the best, right? It was not breaking down like the rest of the FANG names, like the rest of the mega caps, right? Cuz look at Apple compared to Amazon. Right? Amazon's well off its highs, below the 200-day, below the 50-day. The 50 days cross the 200-day. The 50 days pointing down, right? Facebook absolutely smashed, right? Same thing, below the 200-day, 50 days below the 200-day, all pointing down. All short-term EMAs are pointing down. Google is now below the 200-day. 50 just crossed the 200-day. Microsoft's been trading below the 200-day for weeks. Now the 50 days getting close to the 200-day. Netflix looks absolutely awful, right? So Apple was kind of the golden child, right? Apple was the good looking of the bunch. It was holding up well. It was still trading well above the 200-day. At one point even was trading in February above the 50-day while everything else was getting smashed. Now I think Apple's just playing catch up. It's just catching up to the rest of the group. And if Apple breaks the 200-day this week, Apple's going lower. Apple could see, I think there's two spots Apple could go. It could go to where this trend line is, where this uptrend is, which would actually line up right along with some support at the time when it gets there. Now, I would expect a little bounce off the 200-day. It's like, say it taps it there early tomorrow. I would expect a little bounce off the first tap and then see what happens. See if they hold it, or if sellers just continue to step in and just overpower any kind of buyers off the 200-day. Now Apple's the one that is different. Not only do they have a huge buyback, but it's one of the best and most. I think it is. If it's either Apple or Microsoft are they're the number one and number two most heavily ETF stocks. They're the most widely openly held stocks is Microsoft and Apple, because they're they have great management, they have great products, they have great companies, great cultures, great everything's great. They have huge buybacks, huge cash flow. Everything fundamentally is just so sound with those two companies. They're so widely ETF'd. But I think Apple could come lower, especially if it breaks the 200-day. It's just playing catch up, in my opinion, with its peers. It's held up so much better compared to the other ones. It's just catching up. Yeah, that's a good point, Joe. The union talks have definitely been bearish on Starbucks. Yep, it's a headwind for it. Yeah. Yeah, no problem. I'm glad that helped. Everybody's different. Everybody does things a little differently. Their strategy's a little different. It's why, I get asked now and then why, like, hey, why don't you post your trades online and things like that? The reason I don't is because unless you know my strategy perfectly, or exactly how I trade, it means nothing to post my trades on Twitter, right? Unless you know my time frame, my strategy, how I trade, it doesn't make any sense. And I don't want to influence somebody from making a decision. Now, I'll try to point out certain things or things I'm seeing, or maybe I'll post a setup, but it's up to that person to trade it based on their strategy, their risk profile, their risk tolerance, their risk management. It's not my job to tell them how to trade it, right? And unless you know exactly what I'm doing and how I'm doing it, then it really doesn't benefit anybody for me to post my trade. Because everybody's style is different, their time frame is different, their risk is different, their account size is different. PayC. One of these names, PayC, or nope, it's not PayC. There was another one. Maybe it's PayZ. Is there a PayZ? No. There's another one of those. It's very similar name, like PayC, that was holding up really well. I'll have to find it. Is it consolidating? Yeah, maybe consolidating for the next leg down. again, this is in the same situation as every other high growth risk software type name where it's failed to close above the 20 EMA. And now it's even struggling to get above the 9 EMA. And it's got kind of an M-shaped pattern. So it's really just they're trying to hold it at this support around 296. But as soon as this breaks, it's over. Let's take a look at the weekly chart. Oh, nice. It did come into some weekly EMA support. That's not a bad spot to hold if it can hold it. See, and the thing about these bases and why you never really know when the bottom is in is because you don't know how long it's going to take for stocks to make new bases or to build bases. Now you can see if you go back here to May of 2021, that's kind of where the support is setting in, right? That's what it's holding right now. But that's support for as long as it holds. But as soon as that breaks, that support is now resistance. And, you hope it can hold here. But until it actually gets a day where it closes over the 20 EMA, and you start to get the 9 EMA to curl up, it's really hard to say the bottom is in on this thing, right? Nobody has a crystal ball. Nobody knows what's going to happen. Nobody knows when it's going to happen. But actually, Adobe is a great example, and this is an example I always use when I was teaching my classes as a stock that could take long time to build a base. So, for example, Adobe, and the reason I use this is because if you look at Adobe, look how long Adobe traded in a range before it actually broke out of that range. So, from back in August of 2020, this stock traded sideways until June of 2021 when it finally broke out of that base. So almost a year it took for Adobe to build this base. Then it finally broke out of it, 10 months later. So you don't know how long a stock is going to take to build a base or to break out of a base. Right? A lot of it could be catalyst driven. It could be market driven. It could be sector driven. It could be, usually it's earnings driven. But if you're long, you have no reason to get out of it, right? Depending on your cost average. But it just shows you how you have to remain patient. And if you're not in and you're waiting for that breakout, then you have to be just patient for it to show you it's ready to break out of the base. Because look how many times you would think it's going to go up and retest and break out, and only to just kind of fizzle off. Make a little run, fizzle back off. Make a run, and just fizzle back off until it actually does it. And the IWM did the same thing. I even got caught holding more size than I really wanted to with the IWM in this mode. I should have locked more profits, hindsight, right? Because when IWM finally broke out of this base, IWM had been trading in this range. It got into this range, back in January of 2021, and it traded in the range, didn't break out of the range till November, right? So almost the whole year, 2021, it was trading in this range. It finally broke out. It's like, all right, here we go. We had 11 months of consolidation. We're ready to break out. We could go on a monthly run, and we broke out only to just roll right back over. Right now, I had taken some profits along the way, and I didn't take enough profits as I should have. So, but again, it's just one of those where when you get these big monthly breakouts, typically what will happen is you'll break out, come back, retest that breakout, and then make that next leg up. But the IWM is just a great example of something that just failed to break out and came right back into the range. Yeah, AI, I don't even think there's any reason to nibble on it. This thing could go to single digits. It's just been nonstop down on this AI. I've watched this name for a long time. I tried it a couple times. I think even back in here when I thought it was building a base, I tried it a couple times just to get stopped out. So I have not even looked at this name, or I've looked at it every week, but I've not touched it since back in here, early 2021. Just let it keep going. It's still pointing down. There's no signs of a bottom yet. PaySafe, is that it? Here, I'll tell you. That could be it. There was one that was holding up really well. One of those pay names. Paychecks. This name was holding up really well, I thought. Back in here. It's holding above the 200 day. Any stock that's holding above the 200 day to me is good. Is a strong name. Right? Anything trading above the 200 day, the way this market looks right now, anything above the 200 day or even above the 50 day is a strong stock in this market. And this Payx was, it's trading above the 200 day. Roku keeps testing the lows near 105. Any play there? Funny you say that with Roku. I was actually looking at it today. Roku is at a make or break point, I think. Look at Roku's monthly chart. Here's Roku's monthly. Right? This is kind of it. If it cannot hold 100, then I think it heads back towards 80. So it needs to hold here. It needs to build a base. This 100 needs to really hold. Let's take a look at the weekly. Yeah, it's testing it again. I mean, if Roku gets a close below 100 at all this week, then it's probably heading lower. It's probably heading back towards 80, which would not be good. After this overview, stocks are struggling with no indication of reversal. When you see Apple, Microsoft, love stock like Tesla, then it looks things can go much lower, no bottom. Yep. Yeah, VR. You need to get used to. So I'll tell you what I do when you guys are seeing me post charts on Sundays when I'm doing my weekly prep. I know it probably looks small in your monitor, but this is a 42-inch monitor, so it obviously looks huge to me. But I have these. This is the split screen I have set up. I have the daily, I have the weekly, I have the monthly. Right. This is the view I'm looking at when I'm looking at these charts, these trends. What are they telling me? You have to zoom out. You have to look at the big picture. Can't just look at the short time frames. It's like the difference between a 1 minute chart and a 1 hour chart, right? They're going to tell you completely different things. What's the true value of Roku? So the one thing you can do to find the true value or to kind of gauge the fundamental side is just look at FinViz. If you take a look at Roku, okay. But honestly, when you're in a bear market or you're in a correction, fundamentals don't matter. Fundamentals just don't matter. Things are going to get undervalued. They're going to get hit over the head. They're going to go much lower than you think they can go. And we're in a rolling correction, if not a bear market right now. I think the NASDAQ might be in a bear market. The S&P is in a correction market. But you look at Roku's market cap is $14 billion. Their annual sales are $2.7 billion. So their forward PE is this isn't right. This isn't calculated right. Their PE is a 60. That's still really high. But I mean, a company that's doing almost 2.8 billion in sales with a 14 billion market cap. I mean, that's not that crazy, but in a bear market or a correction, it really doesn't matter. The fundamentals just don't matter. It's why I'm not a fundamental trader. It's why I'm a technical trader, because to me, I could get 20 people in a room and I'll get 10 of them to tell me why this is a deal, and then I'll get 10 of them to tell me that it's horrible, right? That it's overvalued. It's why there's just no consensus on fundamentals. Kind of my saying with fundamentals is one man's trash is another man's treasure, right? There's just the consensus on fundamentals is there's so much gap between what somebody says and what somebody else thinks. Whereas technicals are pretty straightforward. There's not as much gray. So, all right, guys, we've been going about an hour, so we'll go a few more minutes. We'll take a few more questions, and then we'll have to wrap it up here. I don't like to keep these too much more than an hour. Let's see. Yeah, and guys, don't try to cut out the noise. Try to look at the chart first and ask yourself, what is the chart telling me? Because if you're listening to CNBC or Bloomberg or Twitter or any of this stuff, it's easy to get caught up in the noise. It's easy to get caught up into the bias, either upside bias or downside bias. As far as analysts go, analysts are just as bad, in my opinion. I've been doing this long enough. I read analyst comments every single day, and analysts do the same thing on the way up as they do on the way down. They'll keep raising their price targets. They chase it up and they chase it down. The same thing's happening. So, I have my select 3 or 4 analysts that I trust, that I respect, that I read every day of what they have to say, but it does not trump the price action of the chart. And if more people would just focus on what the price action is telling you and less about headlines and everything else, because think about it. Think about all the headwinds that are going on in this market right now, right? We have the Fed liquidity going away, if not completely stopping this week. We have Russia-Ukraine headlines. We've got Iran sending missiles over the weekend, right? We've got inflation at 40-year highs, yada, 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 yada. You could just keep going with the bullet points, right? And the market is digesting all that stuff, and it's pricing all that in right now. But if we rally post FOMC, if we get a 25 point rate hike and the market starts to rally and we reclaim some upside levels, there's going to be a massive short squeeze. There's going to be a big time rally that could happen in face of all those headwinds. So you have to realize that price action charts are the number one thing you have to respect. Everything else is noise, because there will come a point where the market will rally and people won't believe it, and they'll try shorting it, and they'll try, going against the price action. They're going to get ran over. But for now, the trend is down. And until we start reclaiming some upside levels and we have a couple, it takes 3 days to make a trend, 3-4 days to make a trend. It's why one-day bounces are just a bounce, right? You need 3 or 4 days to make a trend. So we need to have 3 or 4 consecutive days where we've closed above specific levels. We've closed above these short-term EMAs. Things start to curl up, and the price action is where we have buyers stepping in on dips to continue to push the market higher. Until that happens, the trend is down. Sellers are still in control. How about something with strength? MOS. Yeah, there are pockets of names, pockets of strength. To me, this MOS is flashing a little bit of maybe just overbought signals. Again, this is Joe. This MOS is giving me those same kind of signals as that IAC was. See what's going on with the volume? It's kind of that same thing, right? You had the volume speed up. Now it's coming back, taking a breather. It got a little bounce off the pullback. Looks like it got stuffed on Friday. So this may need to consolidate a little bit, right? Your RSI is up above an 80. It's kind of at the high levels. This may need to just consolidate. As long as you hold this 20 EMA, the short-term trend is still intact, right? You had a nice breakout. It came back, retested that breakout here from this level, held, and that's where the ignition started. What is this, another fertilizer company? Says it's in chemicals, agriculture chemicals. It must be a fertilizer. Just be careful with these fertilizer plays, Joe. Make sure you pay yourself, because these are just like anything else. If the Russia-Ukraine situation settles down, Russia takes it over, Ukraine, whatever happens there, these fertilizers or names are going to come back to where they started. And the other thing could happen too is you'll get some insider selling. Maybe they do some offerings because their stock is ripping. They raise some capital, some free money. Oh, we're going to get a hike. It's just a matter of what kind of hike. Yeah, it's never good when you're long a stock and you wake up to downgrades, that's for sure. Yeah, I mean, we've talked about this a little bit. The markets are just in a downtrend. I mean, we haven't really seen much parabolic action other than some seasonality trends through 2021. But I mean, once we broke this channel that we had been in for a while, I mean, we were in this channel from early or mid 2020s all the way through to 2022, and then we broke it. So Square, yeah, here, we'll just do one more and then we'll wrap up. Again, Square is just another one of those names where it's just continuing to point down. There's nothing really positive I can say about it. Everything to me is still pointing down. It's just not an easy road down, up or down. It still cannot close. Look at this. It cannot close above the 20 EMA all last week. It had a couple days above it, but that was earnings. So earnings can change things. But eventually it just kind of set back in and they faded that entire earnings move back off. So if you want to take a look, just kind of zoom out to the weekly. Let's take a look at what's going on with the weekly. Okay, so the one positive thing here you got going for Square is it does have some prior support right in this area. Right? And actually you could, instead of doing it like this, this 101 is acting as support. I almost like to build these little areas or channels because a stock can go through specific levels and come back into another level, a stronger level. So I would say anything from 101, let's say 101 into say 85. I know that's a big range, but this is the level you want Square to hold. And you can even see that's where it made that low. Right off it, where it came right back into that prior area. So what you'd want to see is Square continue to hold this area. Anywhere from 101 to 85. You want to see it continue to grind and consolidate in that area. Build a new base. And then from there, once things start to get better, or the economy turns or whatever, the market turns around, then Square can start to build higher off that base. And guys, keep in mind, and gals, sorry, I just say guys as a generalization, but keep in mind, just because even if we do, okay, let's say we do get the rate hike and the market loves it, and we rally from there, right? After selling off for 3 months, the market takes a little break. We got the Fed. We know what the Fed's going to do, because there's a couple things the market hates. Number one is uncertainty, right? That's what when the market tends to see the most volatility, is when there's so much uncertainty. The market hates uncertainty, right? It likes to know what's coming ahead. The other thing is there's always a wall of worry. That the only difference is that wall of worry is like a marker board or a whiteboard. It just changes what's on that list every so often, right? If you think about the last couple of years, it was COVID. Before that, it was tariff, the China tariff war. There's always a wall of worry for the markets. Always. The Brexit. I mean, you can go on and on and on. And there's always going to be one, right? The market always has to worry about the downside risk. The market never ever worries about the upside, right? It never worries how high it can go. It doesn't care how high it can go, but the market is always, institutions, fund managers are always worried about how low it can go. They're always worried about the downside risk, not the upside risk. So even if we do get some sort of rally, we now have a lot of overhead resistance. So these rallies could be short-lived, and you have to make sure you don't get greedy, and you pay yourself, and you're trading smart, and you're taking the proper risk, because even if we do see some sort of rally in the market, it doesn't mean it's going to last. It doesn't mean that's the bottom for the year, because even in bear markets and corrections, you have bounces, you have short-term rallies that can last weeks, only to be met with the next kind of leg down. You can go through history and look at charts from 2000, from 2010, 2009, 2010. You can go through and just see where you had these rallies, you had these squeezes, and they may have lasted days or weeks, but they eventually just roll back over. So yeah, and the thing about it though is even if with the volume down, even say on Square, the fact that it's closing on the lows is telling you that buyers are still getting overwhelmed. And UPST is another one that's on my short list for tomorrow. It closed below the weekly low. It closed near the lows. It's below, everything's pointing down. It's below short-term EMAs, now back below the 50. So this is another kind of one for me to watch tomorrow for failed follow through. So you saw something that said the market performs best in uncertainty. I've never seen it that way, Joe. I would like to see some examples. Listen, I'm open-minded, even if if they had examples to show me, I would listen. I personally, I don't believe it. I've always read and been taught the opposite, but it's why the market sells off. Okay. And I'll give you my example of why I say that. Look at the pandemic, right? Look at 2020, right? The market was hit with uncertainty, right? We had the COVID pandemic. It was spreading like wildfire from country to country. People were dying. People were getting sick. So what did the market do? It takes risk off when there's uncertainty. The market likes certainty, in my opinion. It likes predictability. It likes to know what's happening or what's coming. So yeah, guys, don't we have these Russia-Ukraine headlines. You can't trust either side. You can't trust the news. There's been a lot of bad reporting on both sides. Whatever happens, happens. It's out of our control. The only thing we can control is our risk. And until, you know, something gets settled or something, there is some resolution, you know, there's going to be volatility around those headlines. Now, does that mean the market, even if it escalates or continues on, does that mean the market can't rally? No, the market absolutely could. The market is going to trade on and do what it wants to do regardless of what's going on. Now, if Russia drops a nuclear bomb or something, then obviously the market's going to freak out. But just, you know, as long as it just continues on with what it is, then, you know, the market eventually is going to price it in or be okay with it. So, all right, guys, let's wrap it up here. Thank you for your time. Thanks for tuning in. If you weren't able to catch any of the video, as soon as I close this, it will be live on the YouTube channel for you to view. So I'll try to do these more live occasionally now that I have time. And, you know, it won't be every week, but I used to do these regularly every week live, and then I switched to doing them in the recording, because when I do them live, they usually last well over an hour, and I can do the recording in 15 to 20 minutes. So a lot of people were liking the recording version because it was shorter. But thank you again for tuning in. Hope you guys have a good week. It's going to be a busy week. Looks like futures are selling off that little bounce we have, which is no surprise. Like I said, everything is still pointing down. Going into tomorrow, as of now, I'm short biased. All my best setups are all shorts. Until the price action tells me different, that's what's going to be my mindset for the week. So hope you guys enjoyed it. Thanks for the engagement. Have a great week. Take care.